Hello everyone, this is John from Data Finance. Welcome back to our channel. We are with you on 26th of January afternoon analysis. On this video, we will cover three main component of the FX market. That is dollar index. The second one is US oil, and the other one is gold prices. These are the main issue. These are the main market motivations, and they are just important indicators. Let's start with dollar index. Today is the Fed day, and tonight we will just hear more about monetary policy of Fed. That's the critical turn for many investors and in many countries, because since 2018 the interest rates are low, and this is just feeling in, especially in quantitative easing. This has fueled inflation. There are a lot of problems in the market, and these are just piling up next to each other. That's why Fed just told we have to limit the demand side, and with this we can just limit the inflation. That's the expectation. And to do this inflation, to curb the inflation, interest rate hike is on the way. They have said 3 inflation rate hike is already confirmed. Just the timing. In this meeting, we don't expect, nobody's expecting a rate hike, but normally it was planned on in June, but in March, 90% everybody is expecting a rate hike in March, and they just want to reconfirmation from Jerome Powell. They just want to hear that one. That's why dollar index is rising, and it has priced a lot of things already. And when we just hear that one, it will just go up 96 levels, and then it will test recent month high levels. If that happens, as I said, a hawkish tone of the Fed just happens, we will see high level of dollar index. Let's look at what can affect, like how it can affect these oil and gold prices.
You are ready to win with us, GAN Markets.
All right, we are in oil chart and in crude oil chart. As you can see, it is testing 86, 87 levels once more, and on the last hour it's just getting rejected from these levels. As I said, this level of this green box is consolidation period of oil prices, because it's the main driver of inflation, and each time it goes up, everybody just screaming that it's enough, it's enough, it's enough. So when we just hear those screams, it just happened this one, and it just declined like this. We don't probably like this decline is mainly from Omicron. That's why it just declined so fast. We had a really fast spreading virus, and then when we just realized that it's not deadly as a Delta variant, the market just the demand side just grew, and then we have seen rebound. And this is the level, the critical level for oil prices. This is the really strong resistance. As long as Russia and Ukraine just a war of the words, not the war of the weapons, if this just goes on, it will just go in this green box, and sometime later the investor will just get bored. They will say, all right, this is a strong resistance, and just sell it a bit, and from a lower point we can buy it again. That's the trading psychology of the traders in this market. You cannot dismiss the traders right now. Maybe like 25% of the oil contracts are just on the hands of traders. Not only demand and supply issue, it's in the past. Right now traders also just affecting the price of oil. All right, and we may see a decline at least until 275 level can be seen in a sell-off from this point. So we will just watch the market, just consolidation time, and then we will see relaxation. This is all important. And dollar index, if dollar index rise, then a benchmark will just pressurize these ones, so we may see lower level on the rise of dollar index. On a hawkish speech, we will just see this one. That's also another scenario. Let's look at our last chart, gold. What's happening there? All right, gold prices are on decline. It has tested really high levels, and right now it's on decline. Main reason for this decline is the sell-off of these commodity. Nothing is happening. People are just waiting Russia to attack, but it's not happening. There is a time frame for this. Why? Because in winter conditions, everywhere is frozen. The forest and everything is frozen, so tanks and other things can move easily. This is affecting the expectation. When we just see that frost just defreezing, it will be harder for Russia to just go further. So the timeline, if Russia just decides to attack, it has to be soon. And if we just don't hear that, we will just see higher probability of just war of words. Nothing happened. They will just say NATO should leave. NATO will say we are not invading Russia. We are just protect our rights, something like that, and it will be over as long as it goes like this. But otherwise, we will just see. But still, 1832 level is critical. It's not going down, going under that one. It may rebound from this level in a with a buy position. When you see this signal, when you see support level working, then you can just buy from here, and then you can just go on another buy. As long as this happens, we will see higher level of gold, but also dollar index. It can just make pressurize if it just goes higher in a fast way. So we may see after the Fed speeches, we may see a decline as well. So for a good trading, just wait for the conference press and then trade after that one. That will be a good option for you. All right, that was it. Thank you so much for watching us. We will be together on more news tomorrow morning. Especially we will just discuss the Fed decisions. Have a nice and profitable day. Bye.